quiet. So let's move on now and talk to a big corporate who's joining in. DLF posted good Q3 numbers. The company has clocked in its highest ever quarterly rental revenues, and bookings also look quite strong with nearly 90% from new projects. To discuss the earnings and the recent announcements that came in from the union budget, more importantly, we're joined by Ashok Tyagi, the whole-time director of DLF. Mr. Tyagi, good morning. Thanks a lot for joining in. I think it was a bit of a shocker when there was the 10 crore deduction cap on capital gains on residential properties reinvestment that came through in the budget this time. What do you think the impact of that would be, sir?
So, honestly, I mean, in all fairness, every budget has a couple of these, tweaks which one wonders. But in all fairness, I think, they were going with a certain philosophy. Purely from a DLF standpoint, I think we have about 40-odd Camellia units that are left, which are the only 10 crore plus units that we have in our sort of overall portfolio. I mean, marginal tweaks here and there. So, frankly, it doesn't impact us significantly. I mean, by the time the next major super luxury project, comes in, it will be, I think, a couple of years down the line. So, I think at least there's no immediate impact. Overall, definitely, I think it could have some bearing, especially on markets like, Mumbai. I mean, downtown Mumbai, where a lot of apartments do cost, significantly more than 10 crores. And I mean, honestly, it just also, please appreciate, it doesn't impact, the sale of all new apartments. It only potentially has a bearing on those sales of new apartments which were funded by a disposal of an existing property, frankly. And I think that is that is the key. So let's see how
what is the percentage for DLF? You said, I mean, it's a very small portion. I think you said 30-40 apartments of Camellia still left to be sold.
We have 40
but overall,
apartments.
In your portfolio, what's the percentage of super luxury?
No, so overall, frankly, if you see, I mean, these 40 apartments, the total value will be about 1,700 crores. And we don't have anything more either now or in the launches in the next couple of years, which should be breaching the 10 crores, mark, really. So hopefully, at least for the next couple of years, we don't have an impact right now.
Sonia, you're not too late, right? 40 apartments are left. Go for it.
You looked very interested when you said 40 apartments are not sold yet.
Not at all. I mean, Mr. Tyagi, sorry, just one thing. Good morning. We had an insurance company earlier, and I asked them, it's very different, of course, in terms of business, but high value, the higher end of the segment, sort of market has been doing very well across a range of products and services, right?
Yeah.
Will this in the future change your plans? I mean, have you bought a piece of land which you plan to develop, or were you planning to do something? Is there a change in strategy which will which will have to be done because of this? Yes.
So frankly, Prashant, I mean, if you would recall, in the Mr. Jaitley years, there was the first tweak that was done was that, if you dispose of one unit, you can only, refinance one unit to avail capital gains. So the GOI has been tweaking these capital gains on property things for the last few years. Every time it happens, it looks as if it could have a marginal impact, but frankly, the market so far has been fairly resilient and it's bounced back. Secondly, on this entire super luxury piece, be it the high value in insurance premia or this, I mean, I think, one has to be balanced, because you also, you also see that the government's also begun at least the glide path to lowering the peak rates of taxation and all, which has gone down by about 3.7% in this budget. So I think, I guess they also have to balance their books. So honestly, not really too much concerned about this.
Okay, all right. Mr. Tyagi, then let's focus on business. Your sales bookings in the first 9 months are around 6,600 crores. But I think the guidance was for around 8,000 crores odd. Come on, I think you'll have to go ahead and revise that number, right? Give us a more realistic number. Things are looking good on ground. Q4 normally is quite strong. By the end of this year, what can you end at?
So honestly, I wouldn't want to sort of, commit to a number, because we have not done it in the analyst call also. But clearly, I mean, I think the 8,000 number should hopefully, be breached very comfortably. By how much, I think we will know in the next 4 to 6 weeks. But I think, yeah, I mean, the 8,000 number definitely has a very high probability of being breached and breached comfortably.
And just going by what you have done on a run rate per quarter, you should beat it by close to around 10% odd. Mathematically, you should be around 8,800 crores. Possible?
Possible, yes, definitely. But again, I mean, markets are what they are. So, but yes, I mean, definitely fairly high probability, Nigel, of that happening.
Okay, that's great. Pricing has gone up quite a bit across the board and across most metros, right? It's crazy the kind of rates that are running now in metros like Mumbai. Even in NCR, Jeffries put out a note where they said that for your projects, for DLF projects, the pricing is now 30 to 50% above pre-COVID levels. Is that true? And if yes, overall, what kind of improvement in realizations do you see for the full year?
So clearly, in the last 2.5 years, there's definitely been a pricing upside. There's no doubt about that. I mean, be it in the super luxury segment, be it in the premium segment, be it in the mid-budget segment. Be it in Delhi, Panchkula. Frankly, definitely, I mean, the price points have strengthened. I do believe that I think gradually, as the interest rate cycle and all have also tended to strengthen. I mean, I think we should hopefully continue to report price increases to offset inflationary pressures, but honestly, I wouldn't want to hazard a number of by what percentage will prices keep on going up. But I think clearly, we do believe that today, if you are a credible developer, have a good location, and have a sort of a product which is appealing, I think you can ask for fairly comfortable pricing levels.
Just one quick question on interest rates. I mean, if you remember when we had spoken, I think sometime late November or something, you basically said that, there's some buyer hesitancy which starts to creep in when interest rates go up to about 9%. Tomorrow we have the RBI decision where perhaps we will see another 25 basis point hike. Maybe banks, etc. will respond. Are we at that level, Mr. Tyagi?
So, Prashant, I mean, honestly, I think that there are two pieces. Yes, I mean, conventionally, 9% used to be a level at which, buyers tended to become more cautionary. But I mean, I'll be very candid that it's not been happening and not only with us, I think with most of the bigger organized players, the pre-sales levels don't report that. The second thing is that while, yes, you are right that the RBI may go in for one more hike, I'm not an economist, so I wouldn't venture into that territory. But by whatever the pundits so-called are saying, I think we are clearly reaching the near peaking of the interest rate cycle. So, if the perception was that the market could hit 9 and, tending to 10 or 10.5, it's a different psyche versus a psyche of that, okay, it's hit 9, but hopefully now things will stabilize and maybe after 3 or 4 quarters, things could begin reversing. And I think we are possibly in that perception zone right now. So, I mean, really, the risk zone was 6.5 to 8.5, 875, and the market has not reacted adversely to that cycle. So I think hopefully, now it should really be a more maneuverable ride from now on.
So what's the pipeline looking like for FY24 in terms of launches?
So we have a big group housing launch coming up in Gurgaon. Then in the fiscal 2024, we will obviously have this launch obviously riding further, and maybe one more significant group housing launch toward the later part of the next year. We should hopefully have a launch in Chennai and in Panchkula. So I think we will have a fairly strong launch pipeline, apart from, of course, selling off whatever finished goods inventory that we have.
Okay, all the best with the launches, Mr. Tyagi. Thanks a lot for joining in and speaking to CNBC TV 18. That is the word coming in from DLF on the budget announcements, the impact. They're saying it won't have any major impact. They don't have any large super luxury project coming up. And, of course, the way forward for their business. Let's slip into a quick break. Up next, Ajay Chaudhary of REC will be joining in to discuss their Q3 numbers, the exposure that they have to the Adani Group. And we'll also connect with George Alexander Muthoot, the MD of Muthoot Finance, to discuss their Q3 numbers. The stock is under pressure. More on that in a bit.